I want to give you a couple case studies. Residential is great, but I want you to look at residential deals and think of rezoning them. For example, there was a deal, and I hope you can see me here, but I'm not here. And there was, for example, a deal where I can give you an example. It was a property on a busy two-way street, and it was a corner residential property for sale. Can everybody see? Ashley, can you see this?
Yep, looks good.
Okay. So this was a residential home for sale at $550,000. They had an open house, and sure enough, I was driving, I parked, and I made them the offer, full price offer. The owners were sitting in the backyard. The broker told me, look, we sold the home at a better price. And I said, look, man, there's just a lot of traffic. It's a lot of noise. It's too much going on here. Residential, it's just not the best, but you want 550, let me put it under contract. It's a residential deal, so it has 14 days for me to change my mind. Automatic. I didn't even have to negotiate anything. And what I did is I actually went to the city planning and zoning department and I asked them if I can change the use from residential single family to commercial property zoning. Why? Because I wanted to rent it not per month, which would have been like maybe $2,500 to $3,000 a month rent, but I wanted to rent it as office space for per square foot, which would bring me almost $6,000 a month. And what happened is when the city planning said, okay, we're going to give you conditional use, that means you can have certain tenants like attorneys, doctors, and all this that don't have too many cars that can park because it had not that much in parking spaces. When I got that approval, which was like literally within 48 hours, they told me, yeah, this could be this conditional use and it's going to take a few weeks. And I said, beautiful. I went back, removed my contingencies with the broker, and I put a big sign. I told them, remove the sign, and I put a sign. I said, this home is going to be leased as office space. Please call. And I put my number, put my email. And I'm going to tell you something. For commercial space, like an insurance company, farmers insurance, attorneys, I ended up leasing it to divorce attorneys. Why? They love the traffic. They have their signs, divorce attorneys, or they have the sign, farmers insurance, etc. I could have leased it to, I don't know, psychic readers and whatever, but they're not as good tenants as the big attorneys firm that was leasing in a big office building, paying CAM, which is called common area maintenance. So I took this residential that could perform at $3,000 a month, converted it to commercial use, and was able to lease it per square foot at $5,900, something like this, per month, plus triple net. That means plus they pay the tax, insurance, and maintenance. It's called triple net lease, and it was a longer term lease with escalations. Value of the property went through the roof. Look at residential, think commercial. I'll do a lot of training on this. It's very important to understand, because if you have a fund and you raise the money and you get deals like this, that upside, you could do one of two things with it. You can share some of it with the investors, which is what everybody does. I don't suggest that. There are other structures that you can actually get the deals. You pay the investors steady returns, which many investors just want the steady returns. They don't want to take risks. They don't want these equity funds. And you can get the deal and the upside becomes all yours, and you keep paying the investors. Many investors like that simple structure. It's called the debt fund. I'll talk more about it in a minute. Case number two, I want to tell you. For example, again, here is one. Forget looking at residential, thinking commercial. Let's just think pure commercial. Busy street, two-way traffic, single tenant building, standalone. Single tenant, you know what that is, like the Jack in the Box, the empty Starbucks, the empty quick service restaurant. QSR is quick service restaurant. So Fazoli's, this company is growing like crazy. So this building is vacant. So you put it under contract, you write the contract, and you say, here's a contract, I want to buy it. Yes, you want $1 million. I'm going to give you $800,000 to put it under contract because it's vacant. I'll show you how to work it out to qualify for these, to put them under contract. And then you start smiling and dialing, and you call the national companies and you tell them, I have this property, is 2,000 square feet on a busy street with 30,000 cars a day, etc. All you need is one tenant to call you back and say, we like this location, we like the neighboring tenants. We're going to send you a letter of intent to lease, and we want a 10-year lease. with 3% increases called escalation. They give us corporate guarantees. These big companies give us corporate guarantees. And you have that, let's say they sign for $83.33 a month. For simple math, times 12 is $100,000 a year lease. Triple net, these guys give you the tax, insurance, and benefits. They come in and they put their products here. They put the Starbucks, they put the Jack in the Box. How do you think they expand? This is one of the many ways to actually get bigger tenants. And when you have that letter of intent, that property now on 100,000, if you go take 100,000 divided by 0.06% for 6% cap, and I'll teach you how to calculate capitalization rates because it's very important for commercial real estate. You do that division, it will give you a value of 1,067,000. The building you had it under contract at 800,000. You got the national tenant to come in and lease, and they approve they want to come in. That becomes worth $1,667,000. How would you like to raise just $200,000 or $250,000 to acquire the building? You put the down payment, you show the bank that you have a tenant interested, and now you got yourself a deal that jumps up at 800,000, 700,000 increase in value. Let's say you even offer them tenant improvement. You say, listen, I'm going to give you 100,000 to fix the space. Guess what happened? You still have 500,000 upside again. You can refinance, cash out some money, do a second deal. You can refinance, cash out the investors, put them in a second deal, and that becomes yours. People tell me, how does one become rich? How do people make $1 billion? Gosh, I mean, $1 billion, that's $1 million, that's 1,000 million. I need like 1,000 years to do that. No, you need to know how to structure your deals. You need to know how to raise capital. But the entire idea, the structure is how to put the deals together. I'll give you another way I've made a lot of money. You know how you can get multi-units? Apartment building, okay? I like to teach, so I know maybe you thought it's gonna be fun. I'm trying to be
Cherif, will you move the screen a little bit closer to the whiteboard? A couple people, yeah, now right, thanks.
So let's say you have an apartment building and it has several units. I don't know, let's say 50 units, doesn't have to be a huge building. Can you take 25 units, separate the units, you separate the water meter, gas meter, electric meter, and you do a condo regime. That means from going to one deed, one ownership, to actually 25 separate deeds for the condos, like you condominiumize the structure of the property. Then you create condos, you sell 25, pay off your debt, and keep the other 25 free and clear. And what do you do when you have free and clear property? You get a credit line, so you're ready to jump on another deal that's great. You don't have to be so intelligent or experienced. You just have to learn 2-3 strategies, look for properties that make financial sense. And these could be done anywhere in the United States and Canada, if you will.